a very good evening, everyone. I hope you all are fine and doing well. And also, I am audible, visible, and everything is okay from my side. Today is the day for the Unit 6 ECB External Commercial Borrowings and what is the meaning of the foreign investment in the India. We are going to start this chapter. We will cover all the important topics and all the important terms in this. Okay, so without any delay, just start the class and just only give me a minute. So, okay, so all set, everything is visible from my end. ECB. What is the meaning of that ECB? These are basically are a type of loan. ECB are the type of loans that eligible the Indian companies they can borrow from the foreign lenders in foreign currencies or Indian rupees. That is basically the concept of ECB is here. We can say here, let me check that I am audible. Okay, audible. Okay, so the ECB is type of a loan, like a company is there who wants loan from the foreign lenders, so they can get the money, they can get the loan after all the all the obligations, all the checks, all the important things, and they can get even in the foreign currencies or the Indian rupees. But one more important thing is there. These loans at least are for the 3 years period that we called a minimum maturity of 3 years. Okay, medium to long term periods loan are included in this. That is the concept of ECB, external commercial borrowing. Fine. And Indian companies can also borrow for less than 3 years, but there are the some rules by the RBI, and these rules have to follow by the Indian companies. And this ECB can be raised, can be taken in the two ways. That is, first one is the automatic route. Automatic route means in which the companies are taking the loan without the RBI approval. That means basically in that cases when they are taking the loan for the 3 years, maximum period is 3 years, sorry, minimum period. So there is no approval of RBI required, and all the things, those banks who are called the authorized dealers category or AD category 1 banks, they will review the cases. Okay, they will okay, so they will see all the things here. They will like we can say they will guideline, they will set everything is according to the guidelines. Then they will see that everything is okay from both end, from the bank's end and also from the company's end. So this is the automatic route. That is why the name is here automatic route. So the companies allows here to raise loans without the RBI approval. That case is come under the automatic route. Fine. Then there is another route which is called approval route. Now what is the meaning of approval route? In this case, whatever the companies are taking the loan, whoever company is taking permission for the loan before borrowing, they have to take the permission from the RBI. They have to submit all the things that they want to take this loan for this purpose. So RBI will approve. After the approval they can apply. So they apply through their bank for the RBI review. RBI, if RBI said that okay you can take loan, then these companies are eligible for taking the loan. That is the concept of ECB, basically a type of a loan in which Indian companies can borrow the money from the foreign lenders, and also they can take the money in like foreign currencies or in the Indian rupees. Fine. So that is the concept of ECB here. Okay, okay. So next one is here the eligible commercial borrowings. what is the in this basically external commercial borrowings, who are the eligible borrowers, who can raise the money, who can raise the loans. Basically this external commercial borrowings, uh, only these entities are allowed to borrow. Which entities? Entities that are eligible, that they can receive the foreign direct investments like FDI. Any company, any company that can receive the foreign investment, any company that can receive the foreign investment is eligible to borrow the ECBs. Okay, any company that can receive the foreign investment, they are eligible, so they can also raise the through the ECB. Those entities that are recognized as the startups, that they are at the initial stage by the Indian government, can also borrow the ECBs. So the startups means entities that are recognized as the startup by the Indian government, they can also borrow the ECBs. Some are the port trust here, SEZ units are there, special economic zones are there. SEZ means special economic zones. SIDB, Exim Bank, Export Import Bank, these organizations are eligible to borrow the ECBs. Now some here microfinance activities entities means those like non-profit organizations who are working for the social society, for the work for the social service, and for the trust, for the cooperatives and the NGOs that works in a microfinance, that can borrow the INR denominated ECBs, means only the money they can borrow in the Indian rupees. And this is the question we can, like examiner can frame the question from this. Question will be like, which type of entities are eligible for the INR only for the INR denominated ECV. So in that case we have to choose that microfinance entities are there who are eligible to receive the loans in the INR denominated ECBs. Okay, fine. Okay, now MAMP means, what is the meaning of minimum average maturity period? See, if I talk about this chapter is very short chapter, full of concepts, and if I talk about the weightage of this chapter, at least 2-3 questions can be there from this chapter. So content is short, but 2-3 questions can be there from this chapter, and one of the important topic is MAMP, minimum average maturity period. That is the minimum time period that the borrower must take to repay the loan, that the borrower promises, like I will repay the loan in this tenure. That is the minimum period by the borrower. Okay, and basically minimum period is already already mentioned, that is 3 years for most of the borrowers, which also includes the startup companies. But these companies can borrow with a MAMP of 1 year, means manufacturing sector companies means who are doing the work related to the manufacture. They can also borrow the money, they can also borrow, but for only 1 years. But in what condition? If the loan is up to $50 million, so they can borrow the money for 1 year too. That is the only rule available for the manufacturing sector companies. Okay, okay. Then there is one important ratio, that is debt equity ratio for the ECBs. Like if ECB is raised from a direct foreign equity holder, like a foreign investor is there who is giving the loan directly without any middleman or any type of other third party. So the debt to equity ratio under the automatic route cannot exceed 7:1. And what is debt to equity ratio? Means how much debt we can compare to the equity. That ratio can't exceed this 7:1. And here are the Indian banks, financial institutions, non-banking financial companies. They cannot issue the guarantees for the ECBs. They can't issue the guarantees for the ECBs. Clear? Then there is a number which is LRN, a very important number which is used in ECB funds after getting the loan. Okay. After getting a loan registration number from the RBI, then you can start drawing. You can start using the funds of ECB. So we can say these types of ECB funds only possible to used when this LRN number is issued from the RBI, and this is the work of RBI, that they RBI have to issue that loan registration number, so the borrower can use the money, you can use the ECB fund. And for this LRN, this borrower needs to submit the form ECB through their authorized dealer category first bank. They have to fulfill the all requirements in that form, then they have to submit it to the authorized dealer category first banks. Now these banks will send the application to the RBI, and RBI will issue the LRN, but in what cases? After reviewing they issues the loan registration number. Then there is a monthly reporting. Borrowers have to report their actual ECB transactions every month. Borrowers have to make a proper report where they can tell about all the transactions related to the ECB to the AD category first banks. They have to report. How can they report? Via form ECB to return, and this report must be submitted within 7 days after the end of the month. Okay, when there is a 31st January, then the form will be submitted till 7th of February. That is the rule that have to follow by the borrowers. And if there is any type of change in the terms of ECB, so after getting the LRN, these changes also means we can say every single thing should be included in that type of reports. That is the concept of monthly reporting. Fine. Then how to convert the ECB into the equity? Okay, there is also the automatic route of FDI. Means if there is a borrowing company who is eligible for the FDI, okay, who is eligible for the FDI under the automatic route, then the company can convert its ECB loan into the equity in the company. And this type of conversion can be done after talking with the lender. If lender allow, then this type of activity can be done, and no extra cost is required here. But it should follow all the rules, all the limits which are already is there in the FDI policy. Fine, that is okay. Okay, just a second. Clear? Now next thing is the pricing guidelines. Every guidelines is there, every document related to these guidelines are already maintained, and now the borrowers have to follow, go over through got the overview of all these guidelines, and then they have to follow all the rules which are mentioned in the guidelines. Now FDI and FPI, there are the different modes of foreign investment, And the foreign investment in India can be made through two main types. What are these two main types? First one is FDI. What is the meaning of this FDI? FDI means foreign direct investment. What is the meaning of this foreign direct investment? In this, what happen? Foreigner is foreign investor is directly invest in any Indian company. They can either invest by buying the share, or also they can contribute to the company's capital. So that is the foreign direct investment. And FPI is when there is a foreign investor buys less than 10% of the shares, typically in the stock market. That is foreign portfolio investor. Portfolio FDI is like a huge amount is invested by foreign lenders, foreign investors, or they can also contribute they can also contribute by investing in the company's capital. But there are also some restriction in these types of investments. And basically, if these types of restrictions are on which basis, like how much they can they can invest, and which sectors are there so they can invest. That does not means they can invest in any illegal activities. No, they can't do like there is a foreign investor and who wants to do any illegal type of work in the Indian companies or Indian business, or they can earn the money through the Indian like any illegal activity from the India. So that type of things are not allowed. There are some restrictions in this. Okay, and what are these what are these restrictions? uh, we will talk about these restrictions also. Like there are some restrictions like gambling, lottery, real estate, and lots of type of restrictions are there. So the foreign investment means in an Indian company where the foreign investor holds at least equity in an unlisted Indian company, 10% or more of the equity in an Indian listed company, capital contribution in the LLPs. And fully diluted means when the total number of shares were issued. Okay, and there is a FDI investor whose shareholding in a listed company drops below than 10%, 9%, 8%, 7%. That type of investment is treated as long as the initial investment was 10% or more. Only when that type of investment considered as FDI, when that investment becomes 10% or more. Fine. Now there are some downstream investments, which is here the concept of downstream investment. What is the meaning of downstream investment? Okay, downstream investment, we can say where the Indian company is here, where the Indian company received any type of foreign investment and that invest in the equity of another Indian company. Any Indian company who is also doing the investment in any another Indian company, that money that is received from the foreign investment, the company that receiving the foreign investment is not owned or controlled by the Indian citizens, but is controlled by the foreign investors. Okay, fine. Okay, just a second, I don't know why this is becoming like this. Okay, so where we are means we can say these types of investments only possible when foreign investment received, and this type of foreign investment Indian company puts money in another company, and if there is a 50% or more investment is there, then the foreign ownership is significant. Then what is the meaning of sectoral cap? Sectoral cap refers to the limit on how much a foreign investor can invest in the paid up capital of an Indian company. that if there is a person who is a PROI, and there are some type of I already told you in the yesterday class about the conditions of the PROI, and basically they can invest in the paid up capital of an any Indian company which is already set by the Indian government for each sector or activity. They can invest only that limit. Okay. Now, what is the meaning of startup company? See, startup company we can say is a type of a Indian company. It is a type of a Indian company that is recognized by the DIPP. That is come under the Ministry of Commerce, Government of India. Just a second. Okay. So the startup company is a type of an Indian company which is recognized by the Department of Promotion of Industry and Internal Trade, Ministry of Commerce, Government of India. And for this startup, there are some conditions. What are these conditions? The company is here registered for at least 7 years for from its incorporation, and for the biotech companies the recognition lasts up to 10 years. Company annual turnover is not more than 100 crore. Company is like to involve in the innovation, creativity, improvement, and some type of business models which are used for the wealth creation. So the startup company is a new company that is working on the innovative products or the services, and it can receive the special benefits for up to 7 years as long as its turnover does not exceed 100 crores. That is startup. Who are the eligible foreign investors? PROIs are the eligible foreign investors, and also the NRIs who are in the Nepal and Bhutan, and the former OCBs that are registered under previously registered but not any type of red list under caution list from the RBI. Okay. And who are the eligible investee entities? Basically these are the types of Indian entities that can receive the foreign investment: Indian companies, trust, LLPs, special investment vehicles, and some startup companies. These are the Indian entities that can receive the foreign investment. Now, I told you that I will talk about the foreign investment prohibited areas: lottery business, chit funds, nidhi business, TDR transfer, real estate business, manufacturing the tobacco product, tambaku products, and also the sectors that is close to the private investment, like railways, where only government is allowed to have the ownership of that type of sector. In their type of sector foreign investment is not allowed. Okay, so there are also some rules which are governing the pledge of shares. What are these rules? A person who is living outside India but having the shares in the Indian company, they can pledge these shares in favor of a bank in India, but there are some conditions. To secure a loan for the Indian company, they are have the legitimate business regions, they are doing good business, they have the declaration of the annual certificate, and also a person who is living outside India can also the pledge shares in the favor of foreign overseas bank. So here we can say some of the rules are also there according about the NDI rules. Rule 1 is include and 2 is including the title and the definition. Rule 3 is including whatever the restrictions are there on the investments. Rule 4 is saying on the about the restrictions on the receiving investment. Rule 5 is all about the permission for making investment by a PROI. Rule 6 is investment by the person resident outside India. Rule 8 is saying issue of ESOP sweat equity shares, and rule 9 is here transfer of equity instruments of an Indian company. Rule 10 is here, you can just say if there is an investment by the SEBI registered FPIs. Rule 12 is saying about the investment by the NRIs or OCIs. OCIs are overseas citizens of India, and proper schedules are there. And rule 16 is by the investments of foreign venture capital investors. Rule 20 is there, reporting is necessary, guidelines following the guidelines is necessary, downstream investment is necessary, and also acquisition and transfer of property by the NRIs is necessary. Okay, so we can say here these things are important. These concepts are important. We also have the other session for the MCQs, and this is the session in which we clear our all the doubts related to the ECB. Basically, we can say these are the important terms, not in the deep, only the overview I told you. So I hope that this class is helpful to you, and if there is any issue in any type of concept, you can just ask. I will address your query, and you can join the Telegram group which is in the description box. So thank you so much for giving your time. I hope everything is good, and we will meet tomorrow for the next class. Till then, take care everyone. Thank you all. Thank you so much.